Welcome back to the Dividend Diplomats YouTube channel. You've got Bert and Lanny, your favorite dividend investors out there in all of media. And we've got to talk about the dogs of the Dow. No, we're not talking about the dog pound here in Cleveland because you know these dogs are quiet right now this season. But we are talking about three of the worst performing stocks in the Dow 30 this year to see if any of them are stocks to buy right now.
Ooh, baby, smash that subscribe button. Give this video a thumbs up. How ask your boys? The Dividend Diplomats. Everybody, we're all about investing here. We're all about reaching financial freedom. We're all about putting every dollar to work by finding undervalued stocks or investing in dividend-focused ETFs to reach the journey.
We're on this journey, guys, and what better way to start with some bad performing stocks? I'm just kidding. There's a chance that you guys own all three of these stocks. I know in the personal individual account here on my side, I only own one of these three. Bert, how many do you own? Two. Bert's got two of Trey. He says, gimme, gimme, gimme. Now, guys, what we're going to do is, again, stock prices are as of October 10th. We are filming this on October 12th. Obviously, this is being released on Thursday morning, so thank you guys for rocking with us. We're going to run all three stocks through the DD stock screener focused on the three metrics: price to earnings ratio less than the S&P 500, payout ratio less than 60%, three, a history of growing dividends. Last but not least, we will check out. We are going to have to check out that dividend yield to see how much you're about to get paid right now. We'll go one by one as well, Bert.
All right, one by one, we're going to be talking about three stocks that are in the Dow Jones Industrial Average. Let's stocks. Are they at the top of it, Lanny? Oh,
or no, are they at the bottom of it?
They're at the bottom of it. Number one, it holds a special place in the drama for 2025. This stock has been one of the most dramatic companies. This stock has been.
They bring the drama, that's for sure.
This company is operating in one of the most highly covered, one of the most, how do I say it? One of the most hated sectors out there. People have a lot of emotions about it. But it's also a sector that generates a lot of cash flow for investors too, much to the chagrin of the people that dislike this company.
And you know what's funny is the fact that this stock is still down as much as they are, because you would not have guessed it, guys. But we are talking about, again, United Health, the worst performing stock through October 10th. Shockingly, surprisingly, they've had a lot of turmoil. First, everybody's going through the Medicare, Medicaid area. Then you have our, Robert Kennedy Jr. doing a lot of things within the health industry. Then you have an assassination or a murder of the CEO of the company. So just a lot going on within UNH.
A lot of noise. That's what I was saying. A lot of noise for this company, but we try to ignore the noise. That's what we preach on our X feed. That's what we preach in a lot of our videos. You ignore the noise. You focus on the fundamentals. You focus on the long-term ability for a company to pay a dividend and grow a dividend. And that's why we're here looking at UNH, the number one dog of the Dow, to see what those metrics look like today.
Again, still down 30% this year. So you might have missed a huge bounce back up over the last few months, but there is still value to be found. Trading at $354.50. Future earnings are expected to be $16.23. That's a 22 price to earnings ratio, just below the S&P 500. So, not as much value as you have, but it's probably adequately priced right now.
Yeah, I think that's a fair assessment for it. It's a great way to say it. Their dividend is $8.84. That's a perfect payout ratio of 54.5%.
What's wild, though, is, again, that EPS has definitely come down a ton, because those payout ratios used to be in the 16 to 25% range. So now it's swelling up to the 55%, guys.
I was about to say that's where their competition is. If you look at Elevance Health, you look at some of the other ones, it is a much lower payout ratio. That is high for the insurance sector.
Yeah. So 15 years of growing dividends for UNH. Again, doing it at 15.36%. Got to like the consistency and the growth on UNH's front.
Yes. And now they have a yield of 2.49% now that they are down 30% year to date. So that's again much higher than their average dividend yield.
You know, 2.49%, not too bad. I mean, it usually would be in around the 1% range. So again, you take it for a grain of salt, guys, because they are down 30%, down 41% since last year. Somehow, after all that, they're still up 7.5% over the last 5 years. That's the first stock. That's UNH. Are you buying UNH? Let us know. But let's get into stock number two, but rip the band-aid off of this healthcare stock.
Merck, ticker symbol MRK. For every reason that Lanny said, UNH is going through some drama outside of its CEO getting killed. Merck is going through the same thing. They're facing the same headwinds
Same
as
murders. No,
UNH.
I'm kidding.
Yeah. Their price though is 85.99. Their earnings per share are 8.92. P ratio is below 10 at 9.64.
Yeah, very good. Very low. That's probably lower than most in the industry right now. Most are under 12, but seeing it below 10 is very solid for Merck. Paying $3.24 in dividends, obviously spread over 4 quarters. Very great payout ratio at only 36%, guys.
And their 5 year dividend growth is 6.56%. They've
Mm.
increased that divvy for 14 consecutive years.
Oh yeah, some years were very low, but lately the growth has been a lot better here. The dividend yield has swelled up because they're down 14%. Again, the second worst performing Dow stock. 3.77% is the dividend yield, higher by a cool
Good.
128 basis points from UNH.
It's interesting. That's the second worst performing stock here on the sector. And there's quite the difference between the
Quite
year
the
to date
difference.
performance, where the fall off is from UNH being down 30% to Merck down 13.5.
Also up 7% over the last 5 years, just like UNH.
Yeah. All right.
215 billion in market capital. Again, let's get into stock number three. We are exiting the healthcare industry, going into the consumer area where, gosh, everybody here watching this video has at least one of their products because they are a dividend king in everybody's bathroom cupboard or
Yeah.
downstairs in your other cupboards.
Let us know in the comment section if you do not have any of their products in their household. If you somehow have avoided this company's products, we
Oof.
want to hear about it because we want to know how.
Yeah, I want to know how because we're talking about Procter and Gamble, ticker symbol PG. My son just brushed his teeth with a Crest toothpaste and a Crest toothbrush. So we got the double knock right there.
Ooh, let's go. Yeah, for us, it's we have some of the crest. I'm pulling up the famous picture now just to make sure I don't misquote it because I have a tendency to misspeak when I'm going through this. Yes, I just wiped my counters with some Bounty paper towels too, from there.
There
So
it is. There
yeah,
it is.
yes, yeah, it is Crest. That's right. We use Crest in our household as well.
Boom, boom. I usually go for whatever's the cheapest with the coupon, and sometimes Crest always comes through, guys.
Yes. All right, but that's not the point of why we're here. This one actually kind of surprised me. They are down 10.71% year.
Yeah,
I was not expecting them to be number three on the list for Dow's dogs of the Dow this year.
that's right. So they're trading at 149.69 with a $7 projected EPS. Similar PE ratio as UNH at 21.48, which typically it's a little bit higher normally for PG, but it's at a good value spot right now.
Is that dividends $4.23? That's a nice payout ratio of 60%. Right on the cusp of our threshold.
Right there. And PG over the last 5 years has been able to grow their dividend on average by 6.73%. But they are a dividend king as well. 68 years of growing your passive income, guys. Ooh, ooh, ooh.
That yield is closing in on 3%. It's at 2.82% now that they're down
Yeah,
10%.
that 3% is like the sweet spot for PG. If you see it there, just buy as much as you can. And when you think you've bought enough, buy some more, guys.
It's like rolling up the toothpaste tube, right? You know that there's just a little bit
Please,
more left in there. Got to get that last
please.
drip.
Get the scissors, cut the bottom, and get the toothpaste out from there, guys. So they are down also 11.4% in the last 52 weeks. Shockingly, still up 3.6% in the last 5 years. Actually, what's more shocking is that they are 350 billion in market cap, bigger than the other two that we just talked about with UNH and Merck.
That is. So, all right, everyone, our three dogs of the Dow. UNH is down 29.92%. Number two, Merck down 21.4%. And 13.56%. PG is down 10.71% from this list.
Let us know, guys, how many of the dogs do you own, and have you been adding to these three stocks? Do you think these are stocks to buy right now? Merck looks the best out of all of them with the lowest payout ratio, with the probably soon to be highest growth rate, depending on what happens with PG. And I think UNH is going to come way down with also the best dividend yield currently.
I agree with that order. I'm still shocked PG's on this list. I'm not going to
PG,
lie.
baby.
Yeah, so interesting. I'd love to see PG again above that 3% yield. That would
Oh,
be fantastic.
I'm there,
All right,
guys.
everyone. Don't forget to subscribe to the channel. Don't forget to give this video a thumbs up. Lanny, what do we not need to forget to tell everyone?
Oh, I know, jabronis. You're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend. Gosh damn, diplomats, over and out.